What's going on, everybody? So the Berkshire annual meeting is going on this weekend. I really wanted to go to this, but I didn't. I I was watching a YouTube video earlier on somebody asked a question to Buffett, like, why do you sell so much cash? I think it's like 180 billion of cash. Why don't you deploy it and use it to buy companies or something like that? And he had a normal response, but one of his quotes I really liked. He said, we only like to take swings at pitches we like, which is a good way of saying that, we could spend the money anywhere, but we like to be smart and not just spend it on anything. And you can't fault them. I mean, having a lot of cash, it seems like a waste. But when you're such a big company, and he does a lot of insurance, and that's why he has abnormally large amounts of cash, is because insurance companies take in a lot of cash up front, and they have to sit on that cash sometimes for decades, and then if it's a life insurance company, they get paid all these premiums, and they don't have to pay any money until someone passes away, right? So it could be like decades before they use a lot of the money, if at all. So they just have so much cash always coming in. But it does benefit them, because it's kind of like if you're a real estate developer, say you buy residential homes, and then you flip them. If somebody's selling a home for like $500,000 and you come in with all cash, sometimes you might even get say you offer $500,000 for all cash, and then somebody says, okay, I'll give you $530,000, but I need to get a loan from the bank. They may just take your $500,000, because when you have to sell somebody who doesn't have the money, there's a risk they might not get the money, or they just stuff happens, and then things may change. Who knows? I mean, the price of the home may go down, or things can occur over a 6-month period or a 3-month period, however long it takes the person to get financing. Alex, what's up? It just could be a waste of time. So having a lot of cash makes it a little easier to acquire companies, because if a company's selling for like 10 billion, there's not that many people who have 10 billion just at their disposal. Even big companies, there's a good amount, but not everybody's going to want to acquire every company. So if a company's selling for 10 billion, there may be only a dozen companies that are in that market that willing to buy. And then how many companies have 10 billion of cash? Probably not many. A lot of companies have to take on debt to acquire other companies. So I started this job at I'm the controller at a real estate development company. So I wanted to put a video together on commercial real estate. And I started organizing, but you know how it is, you start these projects and you get kind of bored doing it, or I want to learn more about commercial real estate, of course, but so when there's no purpose, when you have a purpose, when you have to do at work, you have a purpose, you have to do a certain role, or if you need to do something, but when there's no purpose for me to do a video. I want to do a video, and then I get kind of lazy with it. But this is what I put together. I guess I'll just run through it. What's up? Hi there, guys. So this is real high level. So high level stuff is cool, I guess, because you watch videos on like what are stocks, like what's a good business to invest in. It's usually so high level, it doesn't even really benefit you because a lot of it is kind of in one ear out the other, unless you apply to something. Because if you ever work in a field, and you take an exam, 190 billion. It's crazy, right? If you take an exam, it could be any type of field. You could be take a CPA to be an accountant, or take I don't know, like a test, like the driving test. It's so high level, and like the stuff on the test is usually you never ever come across. Like if you're an attorney and you take the bar, like only like a very small fraction of what's on the bar you actually do in your day to day. A lot of those tests are like things like ethics and stuff like that. So a lot of it is a waste, but they just want you to be well-rounded. So I'll just get into it. And correct me if I'm wrong, but this is just what I've come across. So I try to put it down into a spreadsheet. So commercial real estate is property used for business or that should be for businesses or 5+ unit living spaces. So if it's 1 to 4 units, it's considered residential property. I don't know if that's a rule. Hey, Victor, what's up? Thanks for joining last week. Did anybody see the movie? I'm sure you did. Catch Me If You Can, with Leonardo DiCaprio and Tom Hanks. It's that guy who Frank Abagnale. He pretended to be yes, commercial starts at 5 units. Okay, so that is a rule. I didn't know if that was just something somebody wrote. Yeah, so he was a con man, and then he passed like millions of fake checks. He pretended to be a pilot, Pan American pilot, so he could fly on planes for free. And then he pretended to be a doctor. He said he did that for a year. And he said he passed the bar exam and was a lawyer. He only studied for like 6 months. But it's actually all fake. The biggest con was conning Steven Spielberg into thinking he was this brilliant. But there's a lot of information out there that totally debunks what he says, and he stopped getting speaking gigs because of that. Even if you go to like his Wikipedia page or other sources that he spoke at, like they always like he admitted some facts were over dramatized or exaggerated. And there's been journalists that provided evidence that he was lying. Like he talks about, I think from like up until he was like in his early 20s, he did all, I think from like 18 to 23, I think he did all these crazy things, flew around the world, got millions from banks through fake checks. But apparently he was in jail a lot of that time. He looks like Bernie Madoff. Yeah, that's pretty funny. I guess that there's the similarities. But he was like in prison a lot of the time that he claims he was doing these things, because he went to jail for many years. And apparently he did write fake checks, but nothing like it's not like he was using different names. It was mainly under his name. And it wasn't that much in fake checks. But he did steal a lot, apparently, from individuals and small businesses, places he worked at. That's who I thought it looked like. Wow, really? I didn't think that. Maybe a little bit, yeah, I guess. Yeah. So I saw a YouTube video of this journalist who explained, this guy Javier Leva, who explained all the facts, the information he has, that this guy is a fraud. I asked him if he wanted to do a live stream. I thought it'd be pretty cool. Well, I guess, does anybody have any news? I think the big news I heard was that he sold 109 million shares of Apple. So he's getting rid of Apple, which I kind of agree with him. You know, I do own Berkshire. I don't really own Apple. So, but owning Berkshire is kind of like owning Apple. But I think Apple is kind of like, is plateauing. I think that's just my feeling. I think there's more future with Microsoft than Apple. I've said that for a few years now, so it's not like anything new. Berkshire annual meeting, which is being set exclusively. Many topics. Okay, here it is. Why it sold Apple stock. Buffett also reflected on developments involving AI. He mentioned AI. There's going to be a lot of fraud with AI. You own Apple in the ETFs? Yeah, exactly. It's like I own not directly own, but I do own a lot of Apple. Yeah, I own S&P Index. I own Berkshire. So I probably own like a lot of Apple in my portfolio. If I sum up indirectly, I own a lot of Apple. But when you invest in an index, you can't pick. If there's a stock you hate, like Tesla, like that you would never buy. But if you own an index with Tesla, like that, the S&P 500 index, you can't do anything about it. You can't strip it out. The meeting this year has with Charlie Munger's passing. Buffett also touched on succession plans. He's been talking about Greg Abel for many years now, how he's the real head of the company. A lot of AI. It's just that AI is kind of like, it seems like the future, but it's not as easy to monetize. It's kind of like the internet. When the internet came out, like although it's so cool and everything, but how do you monetize it as a business? Obviously, companies have done it. Like Google did a great job by selling ad space. And then companies sell things online. But it takes time. It takes time for companies to adapt. And, when the internet came out, a lot of companies, even today, you'd be surprised, but especially in the mid to late 90s, a lot of companies didn't really know how to build a website or even find people to build a website. Or they didn't even understand how would people pay you if you sell on a website? How would you get it to them? All this stuff. Vision Pro is a flop. Warren Buffett said the entire Paramount Global stake has been sold at a loss. So he takes losses too. That was 100% my decision, and we sold it we sold it all, and we lost quite a bit. Sometimes taking losses is good because if you sell a stock at like, say you have a $200,000. Say you have $100,000 in like a stock X, and you already, and this is in 2023. And now it's 2024 and you're down to $50,000. And what if you, and let's just pretend you held it, and in 2025, you're down to 40,000. So you took another $10,000. But stock Y, you don't own any. What if you just sold it in 2024 and took the $50,000 loss? And people have said, you're a terrible investor. You sell at a loss. You sell when the stock is down. But if you took that 50,000 and put in stock Y, and say stock Y went from 50 to 70, then you're better off of selling it. Like, just because you have a stock that's down doesn't mean you have to hold it. I know it's hard. I have that feeling too. When I'm down in the stock, I'm like, okay, I just want to at least get back to where I was, which does happen sometimes. There's a lot of stocks, and like Meta was like that. I was down a lot. I did have it I bought it in 2017 at 150. So I was down on that too, but I was down a ton because I bought it in the beginning of 2022 at 330. So it was down to like 90 at one point. But that I had faith in the company. But there's companies I have faith in. Intel I had faith in. I end up selling at a loss, and I put that money into, I forgot what I put it into. But yeah, just because you sold at a $50,000 loss, you actually recovered a little bit, because if you would have held on, you would have brought it down another 10,000. So it's a $30,000 swing. When I bought ASAP, that was one of my worst investments. I don't think it was my worst, but I think it was my second worst. So I bought ASAP, which was Waiter, like 90, which was ridiculous. And then it was down to like 40. And I couldn't take it anymore. Usually I sell if I lose faith in the company. So I took that entire 40 because I wanted to, Netflix was down a lot. And I wanted to invest in Netflix. So I'm like, I don't even like this investment anymore. So I took that 40 and put it in Netflix. And now that 40 is like 70. So I'm still down, but at least I'm bringing it back. I'm recovering. Yeah, it's crazy if you don't, like, no one, which it's kind of like Madoff, where you never lose money year after year. Every year is a 20% up year. Like, it's not possible. Yeah, Paramount Global. I think this drop was from Bill Wong when he was buying the total return swaps. He did it on a few stocks. Like, he kept levering up, and that's what pushed the stock price really high. But you see that the growth, it went December 2020 maybe. So it took like 3 months to go up, but then it took like a week to come down, because that was all like artificial leverage. He was buying these total return swaps. So it looked like when you buy total return swaps, You don't know who's buying the stock. It looks like the bank is buying the stock. So it looks like Bear Stearns and Goldman were putting all this money into Paramount. So other people started putting money into Paramount, because if a big bank is doing it, then they must know something. And then it comes crashing down when Bill Wong had to start paying back. Like he was, what's it called? He had like a cash call, because if the stock starts going down a little, then there's a cash call, and he didn't have the cash. So he started defaulting on all these investments. And then people start selling too, and then it just comes crashing down. Yeah, so they look pretty bad. But even if it wasn't for that, it's still down to 12, which is 12. So, well, it was the low in 2020, so it's back down to March 2020 levels. But that's a low point. You wouldn't expect stocks to be a big media entertainment company should buy Para for their content library. Yeah, they're in bad shape. So I was 100% responsible for the decision. Berkshire owns 63 million shares of Paramount as of the end of 2023, after cutting the position by a third in the fourth quarter. Okay, they first bought in the first quarter of 2022, since the media company has had a tough ride, experiencing a dividend cut, earnings miss, and a CEO exit. The stock declined 44% in 2022 and another 12% in 2023. Netflix, Apple, Amazon, Comcast, Disney can acquire Paramount. Yeah, that will probably happen, I guess. Just this week, Sony Pictures and private equity firm Apollo Group sent a letter to Paramount expressing interest in acquiring the company for $26 billion. So that's why the stock was up. It said it was up 13% because of that offer. So $26 billion. What's the market cap? $9 billion. So why isn't it going up more in price? When was this? The firm also having takeover talks. Paramount has struggled in recent years, suffering from declining revenue as more consumers abandon traditional pay TV. The stock is in the red again, down nearly 13%. So it is up from the end of April. I mean, it did get up to 14. It's coming back. I wonder if this is probably a good swing trade. I could see this. So it was in the 20s, in the low 20s in April. So 1 year ago in the low 20s. So it's been cut in half since then. Yeah, I bet you this will. I think this will go up. I just don't know like if it'll go down to like 7, 8, but I think it will go up like 50, 60% at some point. The problem is, even if it goes up 50%, like if you get it now at 11, let's say it goes to 8, even if it goes up 50%, okay, you'd be up a little bit. If you bought at 11, then went to 8, then it went up 50%. But if it goes to 7, even if it goes up 50%, you'll still be down. It's just hard to know when the bottom is, and they could rebound. They could get back up to $50, $60. It's unlikely. So for a swing trade to really work, you can't like if you buy it too high, like if you bought say it's 14, and you get it. Unless you exit at 17, but you got to just really time it well. That is $16 billion. $9 billion of market cap. So their debt is much higher than the market cap. Equity of $22 billion, so their equity is higher than their debt. They only have $2 billion of cash. Current assets $12 billion. Current liabilities $9 billion. So they have a decent runway. They're not like in bankruptcy or that close, unless I'm missing something. But they cut their dividend. But they said revenue is going down. Yeah, I guess from 2022 it went down, but it is up from 2020, 2021, 2022. It's not that bad. They're probably losing money though. I don't know. It doesn't look that bad to me, but he sold it, so he knows a lot more than me. That's what I'm saying. Like, just because you sell something, whether you sell at a profit or loss, it's irrelevant, right? It's like, is the money better used somewhere else? Because even if you have 10K in a stock, right? If you have 10K in a stock, and say that stock goes up 50%, from this year to next year, but if you sold it and invested in something that went up, that doubled in price, went up 100%, someone may say to you, aren't you pissed off you sold and it still went up 50%? And you said, no, because I bought something that doubled. So it doesn't matter if you're up or down in the stock, and it doesn't matter what you think a stock, like if a stock goes up in the future, it's like what you invest in now, will it go up? Is it a better alternative? Of course, no one knows the future, but if you have a feeling like something's a better investment, that's what I say to someone when they have a stock and like whatever they are, say they're up 20% or down 20%, and they say, I don't like, if they're down, they're like, I'm not sure I want to hold the stock anymore. I'm down 30%, but I don't want to sell at a loss. So I just say, let's pretend you didn't own the stock today. Would you buy it today? Would you, if you had $10,000, would you buy that stock today? Let's say you never owned it And they would say, oh, no, of course not. I say, well, if you don't buy it today, that's the same thing as holding the stock. Because anytime you hold a stock and not sell it, it's the same thing as buying it today. Just sell it. If you wouldn't invest in a stock today, then just sell it. But a lot of people psychologically can't wrap their mind around that idea, just to sell it. They have to wait to get their money back. So let's see what else. So 63 million shares of Paramount. That's a lot of shares. And what was it? Like 11 per share? $12.89. So he had $812 million in their stock. That's a lot. And he probably paid like $2 billion for it. Paramount earnings are forecast to grow 60%. Dividend not well covered. Shares have been diluted in the past year. Of course, Simply Wall Street has it at screaming buy at 41. Analysts have it at so the future analyst forecasts has their revenue 30 billion, free cash flow 800 million. So the revenue is pretty much flat. It's kind of flat for the next few years. Yes, when revenue is flat or even declining a little, the stock usually there's usually a lot of big sell-off. There's not much. Free cash flow is forecasted to be positive, but small. Here's their revenue. In 2013, it was 14 billion. Its highest was 2019, 38 billion. So they're not even close to 2019 levels. I mean, it did come down from COVID to 24 billion. It's come up to 30 billion, but it's still a lot higher than 2019. So they're back to 2018, 2019 levels. Okay, what else did he say? Okay. We missed a lot of things. Buffett says, starting on Saturday, that he and Charlie Munger certainly missed investing opportunities. Everybody misses opportunities. We don't have infinite money. We have to pick our battles, right? We missed a lot of things, and what we really regretted was missing something that turned out to be very big. We never worried about something that we didn't understand. Why should we be able to predict the future of every business any more than we can predict the yields more likely next year? Yeah, so Greg Abel is going to be the main guy soon. Buffett's planned successor. I heard him speak. He's he's pretty good. I mean, nobody's as moving as Buffett when he talks. Now he's getting a little old, Buffett. It's getting a little harder to. CoStar seems like an interesting angle to play real estate. CoStar. But you brought this up last time, right? CoStar. $37 billion, 91. Look how low it was. At least it's not trading at an all-time high. It was 100 in 2021. Yeah, CoStar, I think, yeah, we talked about it last time. It looks pretty good, right? It's lots of cash flow. Okay, so they provide information and marketing to commercial real estate. Confluent. This is a little smaller, 9 billion. That's come down a lot. That was over 90. Confluent. Okay. Confluent. Okay. $29.9. Okay, let's get their whack. It's a pretty high whack, 11%. Let's see their the prior cash flows and earnings. It's only negative. That makes it hard. It's a hard one to value. I guess we get the future revenue. Maybe that gives us more information. 950, 1.2, 1.5. Okay, yeah. Okay, it still seems overvalued, Confluent, when I put it into the model. Software infrastructure. I gave them pretty high margins, 30%. I mean, if I lower the WACC to 9, it's a little overvalued, not too bad. I'm at 25. It's 29. Apollo Gold Management. $109.62. Apollo. I think we looked at this before, Apollo Gold Management. The revenue really drops from 33 million to 33 billion to 3.6 billion. Wait, why does it drop again? Didn't we talk about this? 3.6, 4, 4.7. So 10% whack. This also seems really overvalued. I wonder why it dropped so much. So I'm at like $38 a share, which is where it was in 2019. Okay, oh, they're an asset manager. They're a little harder to value an asset manager than a normal company. Apollo was formed in 1990. Okay, so they have some pretty big investments. ADT, Sirius, Smart and Final, University of Phoenix. Wow. That's like, you want to avoid a for-profit university. They generally are not as reputable as a nonprofit. Personally, I don't think you learn much from any university. But it's all about perception, right? and your Ben position. Oh yeah, Yahoo. Yeah, they own Yahoo. That's big, right? Yahoo. If it was 2002, that'd be pretty big. I still, I do use Yahoo. I don't, Yahoo has really come down a lot. It used to be one of the bigger search engines, but I still like the Yahoo Finance better than the alternatives. Franklin Resources, yeah, that's another asset manager, right? Well, that's come up a lot too. Yeah, they've done really well. Are you a degree holder from your University of Phoenix, or just you're saying as someone who has a degree? School and college. Yeah, I don't really. I don't think I learned anything. No, a Canadian. Yeah, I don't think I learned much from college. It does kind of mature you and teaches you to kind of like be independent, and it proves you can get through it. But I don't think I learned anything that I kind of took with me. And I got my MBA too. It's not like I don't think. Yeah, I don't think it got much out of that. But it helps you get a job. So yeah. So if you own a property with 5 units, residential units, that's considered commercial. 4 is not commercial; it's residential. Yeah. So the purpose of commercial is to generate income. So a commercial property, the value is how much income you receive from it. When you buy residential, the value is how much the home is worth. So you compare it to other homes in the neighborhood, or similar, or maybe the next neighborhood with a similar size house. So it's all about comps. But commercial real estate's different, because you can have a beautiful building and next to it is not as beautiful and even smaller in size, and that building can get more money because the tenants, it's all about how much money. It's NOI, net operating income, your income from the property minus your expenses. That's the value. It's like a business. So there's a lot of types. Office space, you might work in one. Hotels, retail, like a Starbucks. Then you have multifamily. Apartment buildings are considered multifamily. Industrial, like Amazon warehouse, that's industrial. Or a manufacturing facility, that's industrial. Mixed use, where you have maybe some office spaces. Maybe it's like on a bottom floor is a Domino's Pizza, and then the two floors above Domino's is people live there. So that's mixed use. With electricity demand set to rise with AI, I'm also saying, that makes sense. There'll be a lot of demand with AI. Next era is a good play. These are the kind of things you have to think about. And even if you're wrong, even if AI doesn't take as much electricity as you think, it's still, electricity is a pretty good investment. It's not super risky. You have realty income. Yeah, that's a popular, like, monthly. If you want a monthly dividend, is a good option. Stating that they're kind of losing their focus and offered some alternatives that I can't remember. Yeah, it's tough. You can find negative news on anything or positive news on anything. So they usually break down commercial real estate into different classes, and I think I can't remember. I know A, B, C. A is the best, but I think there's class D and E. I don't know how high it goes. Is D the worst? Is that the highest? Yeah, the real estate development company I'm working on, they have a number of properties they're working on, and most of it is in development stage. Some is pre-development. They have to get permitting and all that stuff and funding. So I guess Class D is the highest. Class D must be like junk. Class D, I should put that in here. Class D are usually the ones that have been sitting vacant for a long time. Okay. So let's go from the top, in case anybody cares. 13% yield. BXMT. Yeah, 13%. And it's forecasted to stay at 13%, but so it was around 7%, or maybe a little higher, but from 2014 to 2019. Then it went up from COVID. It came back down to 7. I have a feeling they're going to bring it back down. Yeah, I should be watching the annual meetings, right? I'll just watch the reruns on YouTube. Well, I guess since the meetings are the big topic, I mean, do you watch it live? I don't. I never watched it live. I've always watched like videos after the fact. Okay. Berkshire will continue to fight lawsuits brought against electric power company Pacific Corp, more than 90% of which is owned by Buffett. Okay. Buffett said we talked about it earlier. They sold their entire stake in Paramount. I think they paid probably $2 billion. They sold it for $800 million. 63 million shares. Okay, they thought Greg Abel will take over. We don't. It's funny how small a group they have to manage their book. They only have like 5 people. Okay, he told his investing managers Todd Combs and Ted Weschler, both former hedge fund managers, have helped Buffett manage a small portion of the stock portfolio for about the last decade. Yeah, he trims that. That was a big news. He sold 100 million shares of Apple. No, 100 million. Was it 100 million shares? $100 million. I think it was 100 million shares, right? Buffett said it's extremely likely that Apple will remain the largest holding at his company. Yeah, Apple, it's grown so much. He must have I think he's up like 10x on Apple from when he bought it. I mean, when he bought it, it wasn't his biggest holdings. It became about half his portfolio. Hey, Mike, thanks for joining. That's a story of why we own American Express. Like, if you ask him why do you sell Apple, he just says he talks about why he loves American Express and Coca-Cola. I guess you don't want to say anything negative about a company, especially he still owns probably 8% of the company, so he's not going to say anything negative. And even if he was bearish Apple, he wouldn't sell it all in one shot. I don't think he would do that to Apple. He's going to do it in stages. Okay, Buffett found Japanese trading houses compelling, but says bets in other countries unlikely. Yeah, he went big on 5 Japanese stocks. We bought it as fast as we could. So I wanted to go to this one too. They're looking at a company in Canada. I bet you it's an oil and gas company. This is my guess. Suncor. It's just I'm gonna go on a limb and say it's got to be a bank or an oil and gas company. because that's like in his wheelhouse, and I think those are the biggest, most kind of stable companies in Canada. The big oil and gas and banks, like an RBC, CIBC, CMO, Bank of Montreal, BMO, or like a Suncor, or what's another big Canadian oil and gas company? RBC, mostly held by retail investors. What's the big oil and gas conglomerate type, like the equivalent of a Shell or the equivalent of a BP in Canada? Largest oil Canadian. Cenovus, Canadian Natural. Enbridge. I was thinking of Enbridge too. Actually, I was thinking of Enbridge, not Suncor, but Suncor too. I think Enbridge would be the company. PBR, yeah, that's a great dividend. Good company, good dividend. Wait, Chevron. Why is Chevron here? Chevron's US. So, well, you do have Canadian Natural, which is a big. Then you have Canadian Railway. What did you say? ARC? Is that what you said? Imperial. Ank. You said Ank, not ARC. What the hell? What the hell is Ank? Ank? Did you mean ARC? Is that what you meant? Anchor Resources Corp? No, you didn't mean that. Pembina. I don't think Pembina, but I mean, I could be wrong, but Imperial. If I was gonna guess, because he does like oil, he likes banks. But is there another company we're missing? Largest Canadian companies? Because there's some there's what's it called? The online, the website company, the Shopify, right? I don't think Shopify. I don't think Toronto Dominion, maybe. Reuters, BMO, Scotia. Wait, look. Yeah, Enbridge. What do you guys think? So TD is getting smoked for laundering Chinese fentanyl money. Air Canada, I don't think so. In broadcast Canada, Buffett teases a possible Canada investment. Hinted that we do not feel comfortable in any way, shape, or form putting our money into Canada. We're actually looking at one thing. We do not feel Oh, we do not feel uncomfortable. Okay. We're looking at one thing right now that not real. What? Yeah, he'll never say what investment it is until after the fact. Heading into the meeting, there's been a lot of speculation about which investments the company has been granted confidential treatment regarding one mystery stake it's been buying for the last 3 quarters in the financial sector. Okay, so that narrows it down. I'm sure it's I'll just Bank of Montreal. I'll go. I don't know. It's hard. Like, which one would it be? Or CIBC? Buffett said Charlie Munger. Okay. Buffett said that AI scamming is the next growth industry, like the technology of nuclear weapons and its potential for great change. He doesn't know anything about AI, but recounted a recent encounter with an AI-generated image of himself on a screen that made him nervous about the technology. You try a Zin yet? No. Zin, the is that the tobacco or cannabis? Tobacco, yeah. The nicotine. I don't like nicotine. I don't like I tried it before I smoked. I don't like drinking either, actually. I don't really enjoy it. I'd say TD. Yeah, TD. I think TD, yeah, is a possibility. I was thinking TD. Yeah, RBC, TD, Bank of Montreal, CIBC, Toronto Dominion, Scotiabank. They have some pretty big banks in Canada. What about he said financial sector, so that could be doesn't have to be a bank. It could be well, it's not going to be insurance because I mean, I guess insurance is kind of financial, but it's if he says financial sector, it's probably a company, either a bank or a asset manager, or I guess it could be a mortgage company too. It's just like with alcohol. If I'm with friends, alcohol is enjoyable, but when I'm like in like not a comfortable situation, like a situation where I don't really know anybody, I feel like alcohol enhances my anxiety. It doesn't even help it. Maybe I need to just drink more, I guess. I don't know. Maybe I'm not drinking enough. But recounted recent. Okay. When you think about the potential for scamming people, if you can reproduce images that I can't even tell you, that say, I need money as your daughter, I just had a car crash, I need 50,000 wired. I mean, scamming has been a part of American scene. Yeah, AI will definitely help scamming because when you apply for something like a bank account, they ask for a photo ID. And if you could just reproduce on AI, or I remember with Yelp, I had a Yelp account, and then I didn't use it for like a year or two, and then I switched it to a different email address. So they asked me, and this is the only time I've ever been asked this, but at Yelp, they said, send us a picture holding like 2 fingers up, something like that. And I sent them that picture, and then they reactivated my Yelp account. But with AI, you can do that. Even without AI, you can do that. But it's not that easy. Like most people don't know how to do photoshopping that well. I can do it, but it won't look that great. But with AI, you can really make stuff look good. With a zin in my mouth. I mean, I've enjoyed it. Like I tried chewing tobacco, and I remember it was enjoyable, like relaxing, and even smoking was enjoyable. But I have to be in the right environment. I have to be like already out and drinking. But like I couldn't have a cigarette if I wasn't drinking. But even now when I drink, I don't really enjoy it that much. So and it's a conspiracy theory. It's not true. It's all in your head. Ajit Jain, vice chairman, is Ajit Jain he runs their insurance division, and he's been doing it for like probably 30 plus years. So he's doing a really good job. And obviously he's staying. He's probably like 70 maybe, but not 98 or whatever Warren Buffett is. 72. So he still has probably a decade left. And that's their main business, insurance. And so he's integrated into the company, so that's a good thing. But people say when Buffett dies, then the stock will crash. Even though Buffett is amazing, a company is its own entity. And if you think about the great companies where the CEO left, most of them have done much better. Like Amazon, like Apple has done like much better without Steve Jobs. Like they're $3 trillion, well, probably less now, but they were never that close with Steve Jobs. And then without Bill Gates, Microsoft has done much better without Bill Gates. And people would have said when Bill Gates and Steve Jobs were there, if you ask someone, you think the company will be successful without, and a lot of people would have said, I don't think so. I think they may do well, but the innovation, they're going to lose a lot, but they didn't lose anything. They're doing better, a lot better. As long as you have a good team and infrastructure, once a company gets really big, it's almost like the CEO is not even as important anymore. When it's a small like a small business with a owner, like I had my math tutoring center, and if you're there all the time and you're the main face, and that's different. Like if you're the only one who could do things. If taking on long-term debt to buy your stock back is considered much better than innovation, we're screwed. What do you mean? Who takes on long-term debt to buy back stock? Remember, Buffett also bought subprime lender HCG back 10 years ago. Oh, Apple. Really? Well, that's not good. I didn't know they did that. But hopefully it's because the stock got low and they thought they'd get a value. A good deal. Buffett accidentally refers to Greg Abel as Charlie Munger. That's pretty funny. He called Greg Abel Charlie Munger. Buffett explains why Berkshire reduced its Big Apple. It's Big Apple is New York City. When asked, Buffett said, for tax reasons, following sizable gains. I mean, that's what rotating your portfolio. Wait, is that the term? Rotating. Wait, no. No, rebalance. That's what if you have a financial advisor, or when a financial advisor says we have to rebalance your portfolio, like all that means is like, let's just say your portfolio, let's just keep it simple, 80%, stocks. So let's just say this is what you told them you wanted at all times. 80% stocks. And let's say you have 800. You could think of this 800,000 if you want. Yeah. Okay. Let's just say you had 80,000 in stocks, 15,000 in bonds, and 5,000 in cash. And say this is on January 1. And then at the end of the year, like your stocks go up to 120. This is a fancy word just for so you when you initially signed up for your to this investment manager, you said you wanted 80% stocks, 15% bonds, and 5% cash, which is how much you had in the beginning of the year. At the end of the year, that's not the case. Now you have 84%. So you would just sell some of your stocks. So maybe he would sell, I don't know, you could do the math, say whatever. $114.4. So you would sell 5,600, 5.6 of stocks, and then use that money to buy bonds and put in some in cash. So now your portfolio, you would bring down your stocks to 114.4, which is exactly 80% of 143,000. That's all rebalancing means, in case you were curious. So it's kind of like he's just rebalancing. He had so much Apple, like probably it was like 10% of his portfolio when he bought it, like 20 years ago, whatever it was, 15 years ago. Now it's like 40% of his portfolio because it went up so much. So he's just rebalancing. Yeah, he's selling flowers to buy weeds. But I think he made enough money, and I don't see the upside as much in Apple as other tech stocks. I think Meta and Microsoft and Amazon are much better. But of course, who knows? This is just what he thinks and what I think. He also suggested it could be tied to his view that taxes may be possibly going higher to fund the ballooning U.S. fiscal debt. So he said it was for tax reasons he sold all that Apple. Yeah, 110 billion buyback. It's crazy. So he's paying 21% taxes on the gains. It's extremely likely that Apple will remain the largest holding despite the recent sales slowdown. It's still such a huge part of his portfolio. So he'll continue to own Amex and Coca-Cola when he's no longer at the helm. Yeah, he bought 5 Japanese stocks. Yeah, maybe I'll do another. We'll talk more about the annual meeting. But yeah, we have friends coming over for lunch. So yeah, thanks for joining. And I just did a video on QSR, RBI, so that should come out today or tomorrow. Okay, I'll talk to you later. Yeah, POW, the that's the gun company, right? Oh, that's POW with 2 W's. Okay. Power Corp. Okay. Yeah, I'll take a look at that. Okay, see you later.